There's a moment right before you click that buy button where the market whispers a truth, and if you don't hear it, you're already on the losing side. I've lived long enough in the world of charts, candles, and restless nights to tell you this. Every trader chases entries, but only the rare ones survive long enough to question them. And among those survivors, Jesse Livermore stood like a lighthouse cutting through a fog of greed and fear. He wasn't just a trader. He was a man who learned to listen to the market the way sailors listen to the sea, by vibration, by tension, by the strange quiet before a storm. Before he entered any trade, Livermore paid attention to one deadly signal, a signal so unforgiving that ignoring it meant financial ruin. And today, I want to take you inside that silence, inside that last whispered warning the market gives you just seconds before you commit. But before we reach that signal, let me take you into the world where the story begins, the moment every trader knows, yet almost every trader misinterprets. It's the moment right before entry. The cursor hovers. Your heart speeds up. Your analysis is stacked neatly in your mind like books on a polished shelf. You believe you've caught the trend early, maybe too early. But in that fragile second, hidden beneath layers of confidence and calculation, there's a tremor, a doubt, a tiny distortion in the market's rhythm. Livermore understood that this second wasn't small, it was everything. Most traders think entries are technical, a setup, a pattern, a signal, a green candle where a red one used to be, but Livermore saw beyond that. He believed that the true danger wasn't in misreading the market, it was in misreading yourself. The moment before you enter a trade is not just about price. It's about psychology. Ego, fear, greed wearing a clever disguise. And that disguise fools more traders than any market maker ever could. So in this opening chapter, I want you to imagine yourself standing on the edge of a cliff. The wind is strong, your footing shaky. You're staring into a valley filled with opportunities, but also traps. You have a rope in your hand, the rope is your capital, and once you throw it, you trust the cliff to hold you. Livermore knew this cliff well. He knew that the market was a shapeshifter, a creature that rewarded discipline and devoured hope. He had made and lost fortunes. He had walked into fire and crawled out with both scars and wisdom. And from all those experiences, he built one foundational truth. You never enter a trade until the market proves it deserves your money. But how do you know when the market deserves it? How do you know when the trend is real, when the movement is genuine, and when the setup is merely a seductive trap? This is where the deadly signal comes in. A signal Livermore never ignored, not once, because ignoring it meant stepping blindfolded into a battlefield where every bullet had your name on it. Before we explore that, let me leave you with a question. What's the one thing you always look at before entering your trades? Right when the chart looks perfect, that's when the mind becomes most dangerous. I've watched traders stand at the edge of opportunity the way travelers stand before a closed gate, pressing their ears against it, imagining what's on the other side. And in those moments, something peculiar happens, something Livermore understood better than any trader of his era. The market becomes clear, but you become cloudy. This paradox, this inverse relationship between market clarity and emotional turbulence, is the silent war that every trader fights. I've fought it too. You have as well. Anyone who claims otherwise has never stared at a live chart while money hummed in their veins like electricity. The paradox starts innocently. A clean breakout. A strong trend. Volume rising like a tide at full moon. Everything aligns, the logic, the indicators, the research. You feel the plan tightening like a bowstring. But inside, there's a different storm brewing. A whisper, what if it reverses right after you enter? A second whisper, but what if you miss the entire move? A third whisper, you waited all week for this setup, don't hesitate now. The mind becomes a parliament of voices, none of them consistent, all of them loud. Livermore understood this contradiction. He knew that the market often moves with deceptive elegance. It offers clarity to lure you in, then injects confusion at the exact moment you must act. It is a paradox by design. And the mind follows the trap. The clearer the chart, the louder the emotions, the stronger the setup, the weaker your discipline becomes, the more logical the entry, the more irrational the inner dialogue. Livermore wrote about this in his reflections, though the world often misses the undertone. He warned that the market doesn't beat you, the subconscious does. He believed the true battleground wasn't the trend line, but the self-doubt crawling under it. I've seen traders freeze not because the setup changed, but because they did. Right before the moment of action, the mind replays old wounds. That time you bought the top. That time you hesitated and watched a rally leave without you. That time you thought you were early but ended up terribly wrong. All those ghosts gather behind you, whispering into your spine. This is the inner conflict. The market sings logic. Your emotions scream contradiction. And in that conflict, most traders misread the signal that truly matters. They mistake emotional turbulence for market turbulence. They mistake fear for caution, greed for confidence, regret for insight. Livermore had a phrase for this internal chaos. He said traders must learn to separate their opinion from the market's opinion. But that separation is carved by discipline, not desire. The paradox is ruthless. When you trust the chart too much, your emotions betray you. When you trust your emotions too much, the market betrays you. So in this second chapter, I want you to picture something. You stand before the trade, your finger above the trigger, but your mind splits into two versions of you. One wants to seize the moment. The other wants to protect you from the past. Only one can win. And the one that wins determines whether you follow Livermore's path or repeat the mistakes that buried countless traders before you. Have you ever seen a perfect setup but still felt something pulling you back? Share it, I want to know. The deadliest traps in trading aren't placed on the chart, they're placed inside your own expectations. There's something I need to confess, not because it's dramatic, but because it's universal. Every trader, even the seasoned ones, falls for the same silent trap at some point. And if you've been trading long enough, you already know the feeling even if you haven't named it yet. It's the trap of anticipation. Not confirmation. Not validation. Anticipation. That tiny cognitive leap where you begin to expect what the market will do next, and once expectation takes root, logic becomes a decorative accessory on your trading desk. Livermore warned about this trap with the seriousness of a surgeon describing an infection. He believed anticipation was the root of almost every major trading loss he'd ever seen, because anticipation creates illusion, and illusion creates blindness. Let me take you inside that blindness. You see a setup forming. Not complete, just forming. Maybe it's a breakout flirting with resistance. Maybe it's a trend that looks ready to continue. Maybe momentum is turning, but not confirmed. You feel it. You sense direction. Your mind begins finishing the chart before the chart finishes itself. This is the psychological trap. Your brain begins trading the future, not the present. You start imagining what will happen after you enter. The surge, the rally, the profit, the validation, the sense of I knew it. And in that fantasy, you begin to ignore the signal that matters most, the market's actual behavior in the present moment. That's where the danger hides. Because once you mentally step into the future, you stop observing the now. You loosen your discipline. You cut corners. You start convincing yourself that being early is being smart. You start rationalizing risk with poetic reasoning. You tell yourself markets reward anticipation, even though Livermore proved the opposite again and again. This trap is quiet but lethal because it changes your perception. You don't see price action anymore, you see potential. You don't see risk anymore, you see reward. You become selectively blind. And this blindness leads to two deadly behaviors. One, entering too early. Because you're excited, confident, or afraid of missing the move. Two, ignoring warning signs. Because you're emotionally invested in what you believe the market should do. Livermore watched thousands of traders fall the same way. He wasn't surprised. He believed human nature itself was the trap, predictable, repetitive, and exploitable. The core problem is simple but brutal. When you anticipate the trade, you unconsciously force the market into your story. Instead of listening to the story, the market is actually telling. This psychological trap is why traders lose with good setups. Why they ignore danger signals. Why they misinterpret clean charts. Why they repeat the same mistakes even after reading every trading book on earth. The market doesn't punish bad strategies, it punishes emotional shortcuts. Livermore saw this truth early in his career. He learned that before every major loss, he had already betrayed himself long before the market betrayed him. And that brings us closer to the signal, the deadly signal you must never ignore. But first, have you ever anticipated a move, jumped in early, and watched the market make a fool of you? Before Livermore acted, he waited for the market to speak first, and when it didn't, he treated the silence as a warning louder than any signal. I've spent years revisiting Livermore's writings, his interviews, his confessions buried between the lines. What fascinates me most isn't the trades he took, it's the trades he didn't take, the ones he walked away from, the ones he allowed to pass like untrustworthy strangers at a midnight train station. To Livermore, the market was a living organism, temperamental, poetic, and at times utterly ruthless. But above all, it was honest. It always revealed its intentions, just not in the way most traders expected. He believed the market had a tell, the way a seasoned poker player spots a micro-expression across the table. And that tell showed itself in one specific moment. When the market failed to follow through. This was the deadly signal. The signal he refused to ignore. The signal that kept him alive while others perished. Let me explain it from his lens as I've come to understand it. Livermore didn't jump at breakouts. He didn't charge into early reversals. He didn't celebrate strong candles. Not until the market proved that strength was real. He believed the market should behave a certain way after giving a signal. And if it did, if price hesitated, paused, or moved sluggishly, if momentum looked convincing but didn't translate into real movement, if a breakout lacked urgency, that hesitation was not a small thing. It was betrayal. To Livermore, hesitation meant the market was whispering, "Not yet, something is wrong here." He once wrote, "The market is never wrong, opinions often are." But hidden inside that famous line is a second truth he didn't state directly. When the market refuses to move after giving you a signal, it's not the market that's changing. It's your expectation that was flawed. He called it the test, the market's way of verifying whether a trader deserved to participate in the next big move. If price didn't move quickly in the direction it signaled, Livermore stepped back. He didn't negotiate with it. He didn't plead. He didn't compromise. To him, lack of follow-through was the market saying, "You're early or you're wrong, either way stay out." I've always imagined Livermore sitting in front of the ticker tape, the room quiet except for its mechanical breath. He'd watch the numbers not for drama but for behavior, like a naturalist studying a wild animal. He didn't force interpretations on it. He waited for its nature to reveal itself. And that's the difference between amateurs and him. Most traders look at what the market appears to be. Livermore watched what the market does next. He believed movement was truth, and hesitation was deception. This subtle shift in perspective, waiting for confirmation not in pattern but in behavior, is the dividing line between predictable losses and professional discipline. And this is the bridge between the psychological trap we discussed and the deadly signal we're approaching. Livermore never entered a trade unless the market proved it was ready to move without him pushing it mentally. Because if you need the trade to move, you're already too emotionally attached. Have you ever seen a signal but the market just refused to move? How did you react? Share your experience below. Let me take you into the room where I learned the true meaning of hesitation and the price you pay for ignoring it. There was a morning, not too long ago, when I decided to test myself against the very principle Livermore lived by. I wasn't thinking about legacy or philosophy. I was thinking about a setup so beautiful it looked like it had been sculpted overnight by the market gods themselves. The chart was glowing, momentum solid, confirmation building, volume rising like dawn light spreading across the horizon. It was a textbook breakout, the kind people screenshot and put on trading course covers, the kind that whispers to your ego, "You're about to prove yourself." I watched as price brushed against resistance, pulled back gently, then surged forward with elegance. Every fiber in my body leaned toward the buy button. But in that moment, somewhere between thought and action, I felt the ghost of Livermore looking over my shoulder. "Wait for the follow-through," his voice echoed from the past. So I waited. Not out of discipline, out of curiosity. A dangerous curiosity. The price hit resistance again. Paused. Ticked up by a fraction. Then froze. The whole market, just seconds ago a wild river, now behaved like a lake holding its breath. I waited for volume to push. It didn't. I waited for buyers to step in. They didn't. The breakout that looked inevitable suddenly behaved like someone had pulled the plug on momentum. Livermore called this the stall, the moment where the market reveals its true intentions by refusing to act on its own promise. But I ignored it. Why? Because I wanted the trade. Not the right trade, the trade I had imagined. So I did what every trader tells themselves they won't do. I clicked buy. The fill appeared. The position opened. And instantly, almost mockingly, the chart moved down by a modest tick. A tiny, almost polite decline. No big deal, I told myself. Normal retest. Healthy pullback. But then the decline continued. A second tick. A third. The candlestick that had looked like a future victory now looked like a warning flare. I could feel the shift inside me. That electric sense of I knew better, but I ignored it. The stall wasn't harmless. It was the truth. And I had stepped over it. Minutes later, the entire breakout failed. The chart reversed with a slow, unbelieving elegance, the kind that teaches you more than 1,000 wins ever will. I wasn't angry. I wasn't shocked. I was still. Because in that moment, I heard the lesson. The market had spoken. I had chosen not to listen. Livermore warned this exact thing. When a trade is right, the market helps you. When it's wrong, it resists you. I felt that resistance. And I traded anyway. That day cost me money. But it saved me far more in the long run. Because the stall, the hesitation, the lack of follow-through, that was the deadly signal. The signal that said, not yet, not here, not now. Have you ever taken a trade that looked perfect only to realize the market was secretly warning you? Share your experience. Loss has a strange way of quieting the world and amplifying the truths you tried to ignore. When that trade turned against me, it didn't happen violently. There was no sudden collapse, no dramatic plunge that sent alarms ringing across the room. It was subtle, like watching a confident voice fade mid-sentence. A gentle decline, a slow drift, a calm unraveling. But the emotional impact, that was anything but gentle. There's a moment every trader knows, a moment when the chart betrays your expectation and something inside your chest collapses inward. It feels like a tide pulling away, exposing the rocks beneath. You don't panic, you don't scream, you simply sink. That was me. I stared at the screen as the candle printed lower and lower and lower. Not fast enough to trigger instinct, but slow enough to trigger reflection. You see, fast losses trigger survival mode. But slow losses trigger introspection. They force you to look at your own decision-making with the clarity of cold steel. And that's exactly what happened. The market wasn't the enemy that day. I was the architect of my own downfall. The hesitation, the deadly signal, was right there in front of me, like a warning sign written in neon. But I had walked past it with the confidence of someone who believed they were immune to simple mistakes. I felt disappointment, but not at the loss. At myself. Because deep down, I knew I had violated one of the oldest, sharpest rules that Jesse Livermore lived by. When a trade doesn't act right immediately, get out. I didn't get out. I didn't even pause. I rationalized. I excused. I turned silence into optimism and hesitation into opportunity. And as the trade deteriorated, something inside me cracked, not loudly but unmistakably. I felt the weight of every past mistake I had buried. The trades I forced. The entries I rushed. The times I thought I'd outsmart the market. All of them resurfaced like shadows rising from a forgotten room. This was my emotional low point, not because I lost capital, but because I lost alignment with the discipline I claimed to believe in. The chart kept slipping. The line that had once glowed with promise was now dull and unresponsive. Momentum was a ghost. The trend was a mirage. My confidence was ash. And then something shifted inside me. It wasn't anger. It wasn't guilt. It was clarity. Pure unfiltered clarity. The kind that arrives only when you're humbled enough to hear it. I realized that the market wasn't punishing me. It was teaching me. And that lesson was sharper than any loss. If the market doesn't follow through, it's telling you the truth. And the truth is worth more than the trade. That realization, simple, brutal, liberating, was my turning point. Because the loss didn't break me. It broke the version of me that thought ignoring hesitation was harmless. And in that breaking, a better trader began to assemble piece by piece, rule by rule, with Livermore's voice guiding the rebuild. What was your most powerful trading lesson? Did it come from a big loss or a small, subtle one? The market doesn't whisper twice. If you don't move when it speaks, it will teach you instead. There comes a point in a trader's journey where losses stop hurting and start instructing. That day, as I sat in front of the failing trade, I understood something I had read 100 times but never truly felt in my bones. It wasn't about strategy. It wasn't about indicators. It wasn't about timing. It was Livermore's core doctrine. A rule wrapped in simplicity, sharpened by survival. A trade must act right from the very start. That was the breakthrough. That was the truth. That was the line between prediction and observation. Livermore didn't believe in forcing trades to work. He didn't believe in giving it time. He didn't believe in babysitting setups, massaging entries, or coaxing the market into confirming his theories. To him, the market was a judge, unbiased, swift, final. If the market wanted to move in your direction, it would show its hand immediately. Not after 5 candles. Not after a consolidation. Not after a pullback. Immediately. He said it clearly. If a stock doesn't move the way you thought it would after you buy it, it's wrong. Get out. That's not fear. That's not impatience. That's behavioral analysis. Because here's the hidden genius behind his philosophy. Price behavior after entry reveals whether your idea aligns with reality. And reality always wins. Livermore knew that follow-through was not a luxury, it was a requirement. A trade that hesitates is like an engine that coughs when you turn the key. Maybe it will run. Maybe it won't. But if you depend on it, the risk is catastrophic. So he built a rule that protected his capital and sharpened his intuition. The deadly signal. If the market hesitates after a breakout or confirmation, do not enter. If you already entered, get out. This wasn't caution. This was respect. Respect for momentum. Respect for alignment. Respect for the truth that the market reveals in its first movement. Because hesitation isn't random. It's information. It's the market telling you. This move isn't real. Smart money isn't with you. Something beneath the surface is off. The breakout is weak. The trend is fragile. Livermore didn't need oscillators to tell him that. He didn't need a glowing dashboard of indicators. He watched behavior. Behavior is the real signal. Behavior is the real trend. Behavior is the real confirmation. When price acts weak at the start, the trade is weak at the core. That was Livermore's breakthrough. And that is the heart of this story. Because once you internalize this rule, once you truly accept that the market's first reaction is the most honest one, you stop fighting trades. You stop forcing entries. You stop trying to prove yourself right. Instead, you wait for the market to reveal what is true. And that waiting, that discipline, that surrender to behavior over prediction, that's where profitability lives. Do you believe a trade should show strength immediately, or do you usually give it time? Markets evolve, technology evolves, speed evolves, but the truth behind hesitation has never changed. Modern traders often believe they're navigating a different universe than Livermore did. Tick charts instead of ticker tape. Milliseconds instead of minutes. Algorithms humming behind every candle. A global army of traders staring at the same screens. But beneath all this noise, one thing has remained ancient and unaltered. Price behavior still tells the truth before analysis does. The deadly signal Livermore warned about. That moment when the market hesitates after a breakout. When momentum stalls. When a trade refuses to act right. That signal is more relevant today than at any point in history. Because modern trading has created a paradox of its own. We have more information than ever, but less clarity than ever. Indicators flood screens like neon lights in a crowded bazaar. News alerts fire like fireworks. Social media injects opinions into your bloodstream faster than adrenaline. AI sentiment tools and heat maps promise clarity, but often amplify noise. And in this blizzard of data, modern traders make the same old mistake. They confuse analysis with awareness. They confuse anticipation with discipline. They confuse technical alignment with behavioral confirmation. A trade may look perfect on your chart. RSI trending, MACD crossing, volume lifting, liquidity clean. But if the price hesitates, then the setup is incomplete. Because price action isn't decoration. It's the ultimate verdict. Livermore didn't need 12 indicators because he understood the market's behavior is the indicator. Modern traders forget this, burying themselves under layers of technical clutter to avoid confronting the uncomfortable simplicity of truth. If a trade doesn't move immediately, it probably won't move at all. This principle hits even harder today because the modern market is faster, sharper, and less forgiving. One, high-frequency trading reacts instantly. If smart money intends to move price, you will see it quickly. Their intentions appear as momentum, not mystery. 2, breakouts require urgency. Real breakouts don't creep. They run. They punch through levels with force, not hesitation. If your breakout looks like it's asking permission, it's already weak. 3, algorithms punish early entries. Anticipation isn't a sign of intelligence anymore. Algorithms feast on it. They trigger stop hunts, fakeouts, and micro traps designed to exploit your impatience. 4, noise is stronger, but behavior is cleaner. The market may look more chaotic, but its behavior pattern remains consistent. Strength reveals itself instantly. Weakness reveals itself through hesitation. Livermore's rule is a lighthouse in this storm. Modern traders need it more than ever, not as a relic but as a filter. A survival filter. Because in this era of screen addiction and strategy overload, you need a principle that cuts through the fog like a blade. If the market doesn't act right at the start, don't negotiate. Don't argue. Don't wish. Walk away. Modern traders lose because they overcomplicate the simple and underrespect the obvious. Livermore's deadly signal gives you the opposite path. A clean, behavioral, reliable path. A truth sharper than ever. Hesitation is the market's way of protecting you. If you're willing to listen. Do you think modern markets still follow the same behavioral patterns as Livermore's era? Tell me what you've observed. Knowing the deadly signal is one thing, but applying it consistently is where most traders fail. Today, I'll break down exactly how to act on it step by step. Which of these steps do you already follow, and which one will challenge you the most? Comment below. We've walked through the psychology, the history, the lessons, and the subtle cues that Livermore never ignored. Now it's time to bring this into your own trading routine, because knowledge without action is just a story. The market doesn't reward theory, it rewards execution. Step 1, recognize the pattern. The first step is awareness. Livermore trained himself to observe every tick, every price movement, and every change in market behavior. He didn't rely on indicators or algorithms alone, he watched the tape like a hawk. For you, this means setting up a system to identify the same conditions he looked for: sudden volume shifts, hesitation at key support or resistance levels, and unusual price action that contradicts the trend. The signal may appear subtle, but it's always there if you're paying attention. Step 2, confirm emotion before action. Livermore understood that the market reflects collective human emotion. Fear, greed, indecision, they all manifest as price patterns. Step 2 is to step back and analyze what the market sentiment is telling you. If the signal suggests hesitation or a false breakout, don't force a trade. Write down what the market is feeling before making your move. This is not about analysis paralysis, it's about clarity in the chaos. Step 3, define your entry point. Once the signal aligns with your market reading, define the exact point where you'll enter the trade. Livermore would never enter blindly. He waited for confirmation that the signal was valid. For modern traders, this could be a break above a resistance level on strong volume or a pullback that validates trend direction. The key is precision. You enter the trade with purpose, not impulse. Step 4, set risk parameters. Every trade carries risk. Livermore's genius wasn't just spotting the signal, it was managing risk around it. Determine your stop loss and position size before you even think about entering. This step is non-negotiable. It's the psychological buffer that allows you to act decisively without being paralyzed by fear if the trade goes against you temporarily. Step 5. Monitor, don't micromanage. After entering, resist the urge to constantly tweak or second guess. Livermore had a disciplined way of letting his trades unfold while keeping an eye on the signal. You should monitor your trade for confirmation of the trend or reversal, but avoid emotional interference. The market moves fast, but patience often yields the biggest gains. Step 6. Review and learn. Finally, every trade, win or lose, should feed back into your understanding. Livermore kept meticulous records of every trade, noting why he entered, why he exited, and how the market reacted. Modern traders can replicate this with journals or tracking software. By reviewing every decision, you reinforce the habit of noticing the deadly signal and improve your judgment over time. Applying this step-by-step approach transforms the deadly signal from an abstract concept into a practical, repeatable strategy. It's not magic and it's not guaranteed, but it gives you the discipline and clarity to act where most traders hesitate, panic, or fail. Livermore's philosophy was simple. The market will always test your patience, discipline, and observation skills. By following these steps, you train yourself to respond correctly even under pressure and to recognize the warning signals that most traders ignore. The market is a battlefield, and every trade is a test of courage, patience, and insight. Jesse Livermore knew that missing a signal could mean losing everything, but he also knew that discipline turns chaos into opportunity. Now it's your turn. Which part of Livermore's deadly signal will you apply first? Comment below and let's discuss how you can survive and thrive in today's markets. As we close this journey, let's step back and see the bigger picture. Trading isn't just about charts, indicators, or even money. It's about understanding human behavior, reading the subtle language of the market, and mastering your own emotions. Every tick, every hesitation, every surge in volume is telling you a story, and the deadly signal we explored today is your way of listening to that story correctly. Livermore lived and breathed the market. He suffered huge losses, faced ruin, and yet always came back because he understood one principle: the market does not lie, but traders often deceive themselves. The deadly signal was his anchor. It kept him from jumping into traps, it guided him toward opportunity, and it separated him from the herd of gamblers chasing noise. Imagine standing in front of the screen, feeling the tension, watching your potential profits swell, and then the signal flashes. Most traders ignore it. They're blinded by hope, fear, or greed. But you pause, you analyze, you act only when the conditions are right. That is the difference between survival and ruin. That is the difference between a trader and a master of the market. This isn't just a lesson in trading. It's a lesson in discipline, patience, and awareness. Livermore's rule teaches us that success comes not from impulsive action, but from observation, timing, and respect for the forces at play. Modern markets may be faster, more complex, and flooded with algorithms, but human behavior remains constant. Fear and greed still dictate the highs and lows, and the deadly signal still whispers to those willing to listen. So, when you sit at your trading desk tomorrow, remember this: the market is speaking. Are you listening? Are you ready to heed the warning signs before the crowd rushes blindly into chaos? Master that, and you've already won half the battle. As the screen fades, remember Livermore's greatest lesson: patience is power, observation is profit, and discipline is survival. Let every trade, every hesitation, and every decision reflect the wisdom of a man who turned risk into opportunity, not by luck, but by understanding the heartbeat of the market. And as you close this video, take a deep breath, reflect, and step into the market tomorrow with one thought: never ignore the signal that could save you millions or even your entire career. The market will test you, it will tempt you, and it will try to break you, but with eyes wide open and patience as your ally, you can walk through the chaos and emerge victorious. Trade smart, trade disciplined, and let Livermore's wisdom guide you.